Siddhartha Khemka, Head of Retail Research at Motilal Oswal Financial Services, now joins in. Siddhartha, electronics manufacturing services, the opportunity is huge. The order book is swelling across the various players. Amongst the entire lot, you heard what PG Electroplast has to say. They're investing in their capex. They're guiding for a very strong Q4. Which one do you like in the EMS space and why?
Yeah, very good morning, Rima. Good to be on the show. So we think we are very positive on this entire EMS space. We see this as a multi-year structural positive story where India could emerge as a large manufacturing hub for electronic components, given the focus for Make in India, plus the focus on the government being very proactive in keeping a lot of items off the import list. So you have to make these products in India, and there's a huge consumer base in India for these electronic items. So it makes sense to increase the production base in India. You have a lot of different sub-segments within the EMS space. So you have the consumer durables, you have the telecom, you have the defense, the drones. So I think companies that we like among them are mostly well-diversified companies within this space. So our preferred pick there would be a Syrma SSG Tech, where we have a target price of 720, which gives a good, decent upside from current levels. Keynes is another stock from the space that we like. Cyient DLM, which has a subsidiary, a parentage from Cyient, is again another well-diversified company with presence across your electronics, defense, automotive space, which gives a good diversification to the company. And one small company from the EMS space which is Avalon Tech, that we like. We have a target of 610 there. We see a good growth across this space of about 50% over the next 2 years, which justifies the current valuation, which is somewhere around 40 to 50 times.
Okay, all right. Hi, Sid. Morning. Good to see you in. What do you make of this entire metals rally? And in particular, I want to ask you about Vedanta. Vedanta valuation-wise is obviously the cheaper metal stock. Promoter entity has sold some stake, which isn't such a bad thing. The only fear is, does he have more to sell? Then that could be a bit of an overhang on the stock. But otherwise, it seems that they're getting their book in order. And Mr. Agarwal, you don't know what he's going to do next. But till now, at least, he's avoided any kind of default or anything on that front. Tell us more.
Yeah, Nigel, good morning. Happy to see you again. So if you look at the overall metal packs, I think the results have been pretty strong for the quarter, and the outlook, again, remains strong given the strong demand outlook, which is keeping the prices, the average selling prices pretty stable, and that is helping the metal companies report a better number. We had some of the others within the space giving out with good numbers. So even if you look at Vedanta, where it came out with very strong numbers for the quarter, the only problem is with the parent having such a large debt, which keeps on coming for maturity, and they need those cash flows. So we keep hearing from the management about some corporate development, the way they could unlock value or hive off some business to realize that money. So the Vedanta parent has loans in excess of 60,000 crores, which is roughly about $7.5 billion. And the dividends from Vedanta, despite Vedanta itself having a lot of debt, but the benefit of the upcycle in the metals has helped them. That covers only about 1.5 billion for cash flows for every year. And the calculation suggests that for next year, FY25, they would need somewhere in excess of 3.5 billion of repayments, which is what they are looking at from the stake sale that got announced or the media report suggested. So on the core, the business operations performance looks pretty strong. We also raised our estimates by about 15% for FY24 on back of these numbers. But looking at the overall corporate developments, I think we have a neutral rating on the stock with a target of 270 because these developments are unpredictable, very difficult to predict on that and how that will have an impact on the operating business.
All right. Siddharth, hi, good morning. PSUs, right, were once again top of mind, top of the leaderboard. So just want to put out these stocks. You know, actually, if you exclude M&M, which went up 7%, and we'll talk about M&M as well, the top 6-7 gainers on the Nifty were all public sector names. I mean, across a cohort of spaces. So BPCL, the price the chart from yesterday should come up. There was NTPC, BPCL up 5%. NTPC was up about another 3.5%. It's been a fabulous 2024 so far. ONGC went up sharply. Power Grid was another big winner. These are all nifty names, large names. SBI, of course, the leader there after the breakout that we saw late last week. And then there was Coal India, which was up about 4% as well. So, incredible moves here. We, of course, had Sandeep Tandon of Quant Mutual Fund. We'll play out some of the bites, etc. in a bit. But Siddhartha, from this space at Motilal, from a coverage point of view, what are the top ideas?
Yeah, Prashant. So across various segments, we have been positive on some of these PSU names. PSU banks continue to be in focus, and given the good results that they have come out, NIMs have kind of pretty stable compared to the private banks where we saw larger NIM compression. So that is one positive for PSU banks, where SBI continues to remain a preferred pick. But if you look beyond that, oil and gas space, we believe that upstream oil and gas companies, they are entering into a multi-year upcycle given the growth in the volumes, the capacity increase, and the stable crude oil prices, which are helping them. So ONGC and Oil India within that space is something that we like. Taking that forward for some of the oil transmission companies. So GAIL is another stock within the oil and gas space, which we believe could be the stock for the year 2024, and has been one of our top picks between that. Banks, oil and gas, power sector is another space which continues to do well. We have seen the strong power demand. The realizations have been pretty strong. Plant load factors have been good, and a lot of these utilities have ventured into the renewable space, which is kind of driving the valuations, the interest from a lot of these large international funds. So NTPC, Tata Power, these kind of stocks, they are also doing well. So I think if you round about based on these sub-sectors within the PSUs, they are reporting good numbers, valuations are comfortable, they are under-owned, and hence they're likely to continue to do well.